program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.
Hello, this is The Global View on this Thursday here at AusBiz. Thanks for joining us. I'm Andrew Gagan. Let's get across what we saw overnight. Now, the big event being Nvidia. Well, tech stocks led the way on Wall Street and S&P and NASDAQ advancing following a sharp sell-off earlier in the week. But that action fairly tepid ahead of the Nvidia result. Now, that came after the close. The AI leader forecasting fourth quarter revenue above Wall Street estimates, betting on booming demand for its AI chips from cloud providers. The world's most valuable company expecting fiscal fourth quarter sales of $65 billion, give or take 2%, compared with the analyst's average estimate of around $61.5 billion. And shares of the AI bellwether rose more than 4% in extended trade ahead of the results, with doubts having pushed Nvidia's share price down some 8% this month. Now, shares of memory chip makers rose on a report that Counterpoint Research, which says Nvidia's switch to smartphone-style memory for AI servers could double server memory prices by late next year. Alphabet outperformed to hit an all-time high. Health insurer United Health and aircraft manufacturer Boeing weighed on the Dow. Retailer Lowe's advanced after the home improvement retailer posted third quarter profit above expectations. Big box retailer Target slipping after reporting a larger than expected drop in quarterly sales, with US consumers pulling back on discretionary spending. And TJ Maxx beat third quarter estimates while it raised its annual sales and profit forecast, betting that a wide sourcing network and fresh seasonal assortments will attract bargain hunting customers. Now, Walmart, that's scheduled to report later this week. Unity Software gained after announcing a partnership with Epic Games to bring its games to gaming platform Fortnite. And Constellation Energy gained after the Trump administration said it has loaned the US utility $1 billion to restart its nuclear reactor in Pennsylvania. Well, the US trade balance in August rose from a deficit of 78.2 to 59.6 billion, with the Atlanta Fed's GDP prediction model projecting 4.23% rate of growth in the third quarter, up from 4.06. And the US October payrolls report has been cancelled, or in fact it's going to be released with a November report in December, which will come after the next FOMC decision. The minutes from the Fed's last meeting showed several policymakers were against lowering the policy rate, yet subsequently FOMC member Thomas Barkin had said, "Our outreach suggests a somewhat weaker labour market than the numbers suggest. If you ask businesses how they see the labour market, they say balanced, but they describe that balance in more detail. It doesn't seem so." Well, the US two-year Treasury yield is around 3.56%, the 10-year close to 4.1%, markets pricing in now just a 30% chance the Fed funds rate will be cut by 25 basis points at the December meeting, with 3 more cuts in the easing cycle. The US dollar rose with the FOMC minutes perceived as slightly hawkish. The Aussie is at 64.8 US cents. Oil prices have fallen on reports indicated the US is renewing its push to end Russia's war in Ukraine and has drafted a framework for that. Brent crude futures down 2.5% at $63 a barrel. Copper's up 1%, iron ore flat at around 104 US a tonne, and the gold price paired gains after the release of the minutes from the Fed. Spot gold close to $4,070 an ounce, and Bitcoin has fallen to 90,000 US dollars. Okay, let's get across what we're seeing with a focus on the US market. Ira Epstein joining us again from Linn Associates. Ira, good morning or good evening your time. Of course, the big event was Nvidia. There was so much anticipation and it delivered.
What about a day like this? Well, first, thanks for having me. Second, beat, and then blowout. Blackwell sold out as far as the eye can see into 2026. And then they have new chips that'll be coming out. So you can imagine what's going to happen there. The big news is that AI is alive and well. There's been a lot of fear that this is a bubble, that the lead company that makes the most sophisticated chip might be running into problems. That is what we've heard. We've heard big names in America and other places around the world that have sold their positions out of Nvidia. Well, tonight Nvidia was up another $8 to $10 at one point. I'd rather not see it go absolutely crazy because that's never good overnight. But as I'm talking to you, the current quote's up about 773 from the close today, so that's about a $13 gain while this is going on. And we're at 194, 35, 36, and we've hit 198 already. So the market is looking at this in a very positive tone. It should lift the futures markets when they open in Chicago overnight. And what this does, of course, is this takes care of that segment. The other segments of the market, though, if you looked at the FOMC minutes, flip a coin. In fact, I don't think even flip a coin. I don't see a reason for the Fed to go for the December cut. But I've said that with you here a number of times. I think that they can afford to wait and see more data that is fresh and that finally takes into account some of the data that's stale, put in the fresh data, and by the time you get into the January timeframe, let's open the talks up then. I'm not saying that rate cuts aren't coming. I'm not saying that the interest rate isn't restrictive. I'm saying that from what I read out of those minutes, I find it easy for the members to just sit tight right now.
Well, Ira, you've hit on two issues that have been weighing on investor sentiment. The first being Nvidia. Well, that's now out of the way. Obviously, a plus there. Do you see that as a significant pivot point, particularly for those tech stocks? And secondly, the Fed. How is that going to bring that into balance?
Well, I didn't say there wouldn't be rate cuts. How it brings it into balance is if the labor market numbers come out and they show that it's weakening enough without inflation picking up, the Fed will make the move right back, and they'll make that move very quickly into cutting rates again. The question is, do they have to do it in December? The question is, why do it in December when we're just starting to get economic data that is by the description old? We're not going to get the October jobs report. The BLS said, forget it. Why would we do that? Let's just move on to current data, which is correct. And that new data, let's see it. Let's see what it does. But December, I think it's 10th is the next meeting. We're talking just over, 2.5, 3 weeks away at the most. We'll get data in between now and then. If the CPI data comes in strong, forget it. They're not going to do anything. If that comes in flat and the labor market comes in with really bad numbers in between, that might get the Fed to move. I think that's where you're at. But what we see today, that's why you're at a 29 to 30% probability of a rate cut. It's fallen from 85, 90% all the way down here. People are seeing it the way that I'm seeing it at this point.
So are you expecting that volatility to continue then, particularly with those risk assets?
Yeah, I love it, don't you? When I'm watching silver make $2 swings a day, it's exciting as a commodity trader. One of the bets that I've been telling people to bet against has been the rise in the oil. When I see the Saudi prince come here and he wants to get 35 jets, he wants 300 tanks, he wants our chips, I'd like to be a fly in that room as he gives the assurance to the president, and don't you worry about energy. We've got plenty of power to produce more from OPEC. We haven't met our quotas. We will keep it under control. Going into that meeting, the psychology to me was to be bearish, not bullish on the energy, to help the president, as he wants all the help he could get, to give to the Saudis what they want. And I think that's part of the game.
All right. And you're still liking gold, given, I guess, the broader...
No?
Okay.
No, I don't. I was with you last week, and I told you I thought 4,400 was a real problem, and getting up and through that number, you've got to prove to me that the inflation is going to keep going. I'm not seeing that. Number two on that parade is, what if Russia is about ready, as the winter is here now, are they ready for talks on how to end the situation with Ukraine? Number three, Russia's revenue stream, regardless of what they tell you, has got problems. I was looking at the recent discounts that they're giving to China, who China's not going to listen to the U.S. on any sanctions. We can't afford for them to get into a fight with us again about rare earths. But in order to get them to buy their natural gas, they're taking what they would normally sell on the world market and they're discounting it 30 to 40% if they can get it to them. That is the other problem they have in the winter. So Russia's bank, in other words, the money they're using for the war, is being tested. They're not in the best of shapes. They'll always say that they are. They are hitting Ukraine with everything they've got. Every day you look, you hear another 400 missiles went at it, and you have to learn to play that. So this thing is not done. The war is not over. That's not what I'm saying. But I'm seeing cracks in the armor where it's starting to show up.
Are you expecting further dislocation in global trade? And we've got the latest, those tensions between China and Japan, for instance.
But what's the tension? So let me give you the reality. So China tells Japan they're not going to buy their fish. Do you know how much fish they bought this year from the first of the year through the first 9 months of the year?
How much?
Under $500,000 worth.
Negligible.
So in other words, they didn't buy in.
Yep.
They said, yes, everything's fine. We understand the plant and the water around it is safe. They're just not buying it. So if the numbers I read are right, and they came from China, from their import-export department, well, if that's the case, yes, the words are big, the actions aren't. It'll blow over. This is the Prime Minister's first new day on the job, let's call it that. She's going to say certain things that she shouldn't. Why even bring it up? Did she have to say they're going to deploy Japanese troops? She did not. She could have said it in another way, like, we don't want them to do that. We prefer that's not the outcome. We'll deal with the situation if it's there. You didn't have to say, we'll consider deploying troops.
Ira, telling it as it is. We love it. Thanks for joining us from Linn Associates.
Thanks for having me.
So let's now focus on the local market. It's going to be interesting to see, given that positive sentiment, that in the wake of the Nvidia result, just see how that buoys the local market. But we are expecting a strong start, as you can see. SPI futures up almost 0.6%. We'll get across that, unpack the Nvidia results and local results too, particularly with a focus on many AGMs today. Stay with us for the open.
This program is brought to you by LGT Wealth Management. Welcome to the next chapter in trusted advice, where global strength and deep local relationships shape wealth that lasts for generations. LGT Wealth Management, lgtwm.com.au.